I'm Patrick Smith, and welcome to today's segment of Gov Conversations with Warren Linscott, VP of GovCon Product Strategy and Management at Deltek. Today we'll be discussing Project ERP and how that can drive lower costs of compliance and improved cash flow.
Hi Warren, thanks for joining us today.
Thanks for having me.
Can you briefly explain what a project-based business is and what characteristics make it unique?
Well, any company that has a large part of its business that's based on winning new contracts and then executing those contracts and discrete contracts is really a project-based business. Some of the industries that come to mind are aerospace and defense, consulting or professional services companies, architecture and engineering, engineer, procure, construct or EPC companies, oil and gas, as well as various manufacturing companies that specialize in discrete manufacturing. Across all of these verticals, there's a horizontal, and that's government contracting. So anyone that really designate themselves as a government contractor in one of these verticals is generally a project-based business.
Government contractors are project-based businesses and highly regulated. What are the advantages of a project-based ERP over generic ERP?
Well, government contractors are really bound by the FAR, the Federal Acquisition Regulations. And so those regulations really mandate that contractors be able to account for what's allowable and unallowable charges. And so a generic ERP system really makes that difficult to do down to the project level, because in a generic ERP system, you can only really account for cost on an organization level or an account level. And then typically what happens is later on they try to reconcile those costs back to the project. And that kind of bolt-on approach creates all kinds of problems to really tying things out and proving things to auditors of the government, federal government, that your bills are correct to the federal government. Project-based ERP system on the other hand, allows you to account for all those allowable and unallowable costs right on the contract level. Allows you to do total project accounting. And so that's really important for contractors, or especially government contractors, that they can then account for all the labor and materials coming into the project, and then in turn bill properly for those costs back to the federal government, all on the project and all within the types of contract terms that you have. So cost plus, time and materials, fixed price contracts can all live under the same roof and then roll up to consolidated financials for the business.
Why is it so important to be able to track allowable and unallowable costs on the project?
Well, the FAR and the DFAR were really set up to designate what things you can bill back to the government, allowable costs, and what things you cannot bill back to the government, unallowable costs. Not being able to separate those or account for those would be devastating for a company that was trying to do business with the federal government, because you wouldn't be able to justify anything that you're billing to the federal government. So project-based accounting software allows you to designate those allowable and unallowable costs, and allows you to provide reporting to the federal government, such as incurred cost submissions, that really outline how you've allocated those costs back to the project.
How can a project-based ERP lower the cost of compliance while still allowing the business to manage profit?
Well, as we talked about, project-based ERP systems allow for total project accounting. That means that you can conform to all the various rules of different contract types all under one roof. And part of that means that every transaction that's going to come into the system and be associated with those projects has to go through the rigorous controls up front to make sure they're valid for that project. And what that means on the back end is that all that information is contained in uniform in the project ledger for that particular project, and reconciliation really doesn't have to occur. So when you get audited, all that information is really available at your fingertips through out-of-the-box reporting and through data structures that the auditors can understand tied back to the contract. That really will lower the amount of time that the auditors will have to take to actually go through the audit with you, and also lowers the chance for errors or discrepancies in their findings, because you're associating everything back to the project and conforming to the rules of the particular contract that you're either billing for or doing work on. And so that's kind of one of the ways that you can really lower the cost of compliance with an audit with a project-based ERP system. From a profitability perspective, is any good project-based ERP system has a very good cost pool system, and that allows you to take indirect but allowable charges like facilities, fringe benefits, or G&A rates, and applying them appropriately to the various contracts and then billing them back to the government. So being able to maximize how you distribute those indirect but allowable costs across your different various contract vehicles is really going to help you to maximize profits across the enterprise.
How can e-business combined with project-based ERP help businesses improve cash flow while staying compliant?
So some of the e-business things that are out there right now are Akron billing and wide area workflow. So wide area workflow is an electronic network that government contractors can use once they're set up to actually electronically send bills to the federal government and get paid electronically. And that can really speed up days sales outstanding or DSO. It also enforces a degree of compliance to even get set up for wide area workflow. That goes hand in hand with Akron billing. Akron billing is really a methodology to assign particular codes to contract line items. So not only at the project or contract level, but down to the line item in the WBS, you have the ability to associate funding levels to an Akron code and then to bill against that. And so a government contractor that's set up to do that out of the box can really reduce their invoice cycles because they're billing to projects that have already been pre-funded and they have all those things set up. And because all the controls are really regulating what transactions can hit the project itself, that really makes it very simple for them to create bills and send them to the government. You have a funded level so that you know that you're going to get paid and there's not going to be any delays there when you send your invoice to the government. And then the electronic network itself really speeds that process along.